With everything that's going on with the pandemic right now, there have been people that have been struggling, whether it be individuals or business owners, and are getting really curious about what it might look like to take a loan out from a life insurance policy that they have. And so in this video, we wanted to talk to you about what that looks like, what types of policies can offer that benefit, and if you are able to take that loan out, how that process kind of works. We're Shannon and Michael, we're with Healthcare Genius, and we are here to help. All right, Michael, first things first, what types of policies can you take a loan out from when it comes to insurance? And how do you know if that's even an option for you in the first place?
Loan provisions are available in most policies that are permanent or have cash value. Term policies are traditionally not going to have any loan provisions available in them because there isn't a cash value in most term policies. So whole life, universal life, index universal life, variable life, those should all have loan options depending on how much cash value you have in the policy. One thing to remember is that policies traditionally will have an account value and a cash value. And the difference between the two is that there are surrender charges for the early years of most life insurance policies. So your cash value and your account value may not be exactly the same. The cash value is typically going to be a little bit less. So you can borrow against the cash value in your policy. So when you're looking at an illustration, you see account value and wonder what the difference is. That's what it is, it's that surrender charge. But you can effectively borrow from most of those policies, and they're all going to be different as far as what their provisions are.
Okay, so if you do borrow from your policy, what happens to the death benefit? Let's say you borrow some amount of money from your life insurance policy and you pass away before that's paid back. How does that work?
So the great thing with life insurance is that you will still have your death benefit in place. Now, it traditionally gets reduced by whatever your loan is. So if you took a $20,000 loan out, then that's normally going to reduce the death benefit by $20,000. So they can work, really well. You still keep the death benefit available.
All right, simple enough. So my next question for you is, if you do need the cash, whether it's to bridge a gap for the company that you own or for personal reasons, what's the benefit of taking out a loan from your life insurance policy versus maybe borrowing from a 401k or another type of retirement plan, or even from taking out a bank loan?
So Shannon, let's start with the 401k loans, because that's obviously where a lot of people have savings, is in 401ks. And the government has allowed increased loan amounts because of the pandemic. So instead of $50,000, which used to be the maximum, you can actually take out a loan up to $100,000. But what happens in a 401k loan is that that money actually comes out of your account. So you're really selling. We don't know if this is the low point in the market, but you're certainly selling at a down point in the market, taking those dollars, using them, and then you're going to pay yourself back over a period of time back into the 401k. So you're not getting the value of your 401k growing other than what that interest payment that you're making into it. So that's really the downside, one downside. The other downside is that if you end up leaving your company and you don't pay that loan back, then there's the fact that that could become taxable income to you, as well as it can incur penalties. Now, again, some of the new rules that just came out, they're trying to look to help people with that.
So, quick question before we leave the 401k. So if you're taking a loan from your 401k, that money is coming out of the account. If you take a loan from a life insurance policy, from what I understand, the cash value is really just used as collateral, right? So does that money actually stay in the policy, or how does that work?
Yeah, that's exactly what happens with life policies, is that the cash growth is still there. So if we took a whole life policy, for instance, if you took $100,000 out of the whole life policy, there's going to be an interest rate that you're going to be charged. That might be 4 or 5%, 6%, depending on, but you're still getting the growth of dividends on the full amount that you put in, that you have in cash. So as you mentioned, it really is the insurance company is just using that policy as collateral. Now, where with whole life or any fixed interest kind of a product, need to really be paying those interest payments. So that 6%, if that was an interest rate, you want to make sure you're paying $6,000 a year back to pay the interest, because over time, if you wait 5-10 years, that can really add up and can deplete your cash value in the policy.
So it really should be more of a short-term strategy.
That's right. That's exactly right. We encourage people, if you're going to borrow from those types of policies, to try to keep it under 2 or 3 years, and definitely to pay yourself back, pay the policy back. Now with indexed universal life, a little bit different, because some of those plans have the ability, your money is still invested, so you never, like the 401k, you've never, or unlike the 401k I should say, you never actually took the money out. So if you had $300,000 in cash and you took $100,000 out, you still have $300,000 in cash that's invested in the indexes that you chose. And with some of these policies, a lot of the loan rates right now are around 4%. So if your index grew at 6, you would actually be seeing your money grow versus you having to pay an interest on it. And when you look at where the market is right now, getting into an index can be very advantageous because the market's down 20%, assuming we think things are going to go back up at some point in the future. So borrowing against your policy can be a very effective way to bridge the gap of what's going on right now and get you through some tough times.
Okay, so backtracking a little bit, what would this type of process look like in comparison to just getting a normal bank loan?
The nice thing about using your insurance policy is if there's cash value in there, there's really no qualification for it. And oftentimes you have a year to pay that interest. So if you took it out today, the interest really wouldn't be due until the following year, versus your bank that, number one, you've got to qualify. If things are tough, they may or may not accept you. And then secondly, they're going to want some sort of a payment plan, in most cases right away. So you're going to borrow the principal and then you're going to have to start paying it back. So, in these types of situations, this is a great way if you have a cash value policy with cash in it to, again, bridge the gap currently.
Definitely. We talk a lot about just the guarantees that are built into most life insurance policies. They're going to be there when you need them if you set them up the right way. So the next question that I have is really about the mechanics. If you do have a policy where you're able to borrow money and you need to right now, what are the steps that you need to go through? How does it work? Who do you contact?
Yeah, normally if you've signed up online, most companies now have online access to your policies. So if you've signed up online, you're going to be able to, in a lot of cases, just download a loan form, fill it out, sign it, send it into the company, whether it be fax or mail, and request. Again, we talked about, in most cases, it's going to be the cash value, not the account value that you can borrow against. So you'll be able to do that, and it's really pretty simple. You can also call. Most companies will have the ability for you to call them, and then they can send you that form in the mail. But pretty simple, get the money fairly quickly.
So moral of the story here is, if you are in a pinch and you need some additional cash right now, borrowing from your insurance policy is a great option, just as long as you stay on top of it and make sure that you can repay that in a reasonable amount of time. But great option, especially considering what's going on and how tough it is for business owners right now. If you need some additional help, you can apply to become our client in the description that's below this video. Please subscribe to our channel. We cover a lot of different topics around life insurance, long-term care, healthcare, and retirement. And if you found this video helpful, go ahead and give it a like. And if you haven't already, next to the subscribe button is a little bell, and you'll be notified if you click on that, so you know when we come out with new content. Again, we're Shannon and Michael with Healthcare Genius, and we are here to help.